Hello, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español, and I am super excited to announce the Art of Reading Price Section 30-day bootcamp. Now, I know you may be wondering, well, Tim, we just had the Art of Reading Price Action mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Art of Reading Price Section educational material. Phase 2 will begin our tape reading sessions. And phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Art of Reading Price Action Bootcamp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off. And you can use that coupon code up until December 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo español. Y'all be safe out in these trade streets, man. Gone. What's going on, everybody? How y'all doing this fine Wednesday evening? We ain't gonna be here long tonight because I got to get, tonight is the homework review with the mentees. So I'm not gonna be before you long. What's going on, Hitler and Share? What's going on, Rhonda Green? What's going on, M Rich? And the M is for Michelle. The M is for Michelle. What's going on? Is there anybody in the Discord? Nope, no one's in the Discord. All right, we're going to get right into it, man. Good evening. If this is your first time tuning in to Tim's Tidbits, I would like to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. What's up, 80? If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it on the shirt. You see it behind me. That's Big Spot if you don't hablo español. And you are in tune to another episode of the Intra-Day Price Action Review. Recap. Y'all know what I mean. Excuse me. Give me a sip of high quality H2O. If you are interested and joining the boot camp. I have a link pinned to the top of the chat, and I have a link in the description. There are 14 slots left. It's only 20 slots available. Gang. If you already a member of the gang, there's a 75% off discount code in the announcements channel for you. The gang, get 75% off. Everybody else, there's a 50% off code, SPYDER50, SPYDER50. Get 50% off. The SPYDER50 code is good until December the 14th. The 75% off code for the gang is good until Christmas, right? It would be on sale until December 31st or until all 20 slots have been taken, right? 16 slots left. Take advantage. If you want to try your hand at trading the prop firm, Apex is running a 90% off sale now for all their evaluations. There's the second link in the description is for Apex. Use my affiliate link. I appreciate those that have used it thus far. Thank you. I thank you. Right now, it's 80% off 90% off all their evaluations, and all of their PA accounts, their PA fees is $125 for lifetime. Normally, it starts at $130 with a $25K, and it goes up depending on what PA account, what account you're going for. The lifetime increases with the size of the account. But right now, all of the accounts, if you pass the challenge, all of them are $125 for lifetime. One set fee for all the accounts. So if you get the 25K, right, you can get it for $15 for the eval. Then if you pass, you can pay $125 for the lifetime assignment fee. If you get the 50K, I think the 50K may be like $20 something with the 90% off. Then if you pass, it's $125 for the what's the name. So y'all see how the math go. Take 90% off what it is, and then $125 for the assignment fee. Let's get to it, man. I got to go do the homework review with the mentees. Please pull up with your hard-hitting questions. Don't get over there and be like, oh, Tim, I don't have no questions. I just showed up to see if anybody else has anything. Now, what's up, 80? What's up, Deborah? What's up, Kim? What's going on, Marco? Right? What's going on? Let's get to it. Mentees, if y'all don't have questions, just be like, look, Tim, we ain't got no questions tonight. I ain't no need to rush off and try to get to the homework review, because we won't be doing homework no more anyway. You know what I'm saying? We won't be doing homework no more. We just come to the Q&As and hope you start talking and teach us through your babble, because we don't go back and do the homework no more. Cause we ain't got no questions. All right, man. We got a 15-minute chart here, looking at today's price action. Let's squanch up the chart, right? Looking at the 15-minute chart here. This is where price opened up over here, right? So we just went up. It was a nice little trend day to the upside. A very nice little trend day to the upside, right? Nice trend day to the upside. So we opened up here at 6 o'clock. We went down immediately, traded down immediately to the high of this, 15-minute. We got a volume imbalance there, so we would include that. All right, this is going to be a quick and simple homework review. Look at Tish talking about, I don't have any questions. What I tell you? Here to learn and share. No questions for me. What I tell you? Y'all telling on yourself. Y'all telling on yourself. All right, so what was I looking at? We open up, we drop down. Okay, so we got a volume imbalance there. So we would include that. Oh my goodness. Oh my, Kashaya, come in the Discord and ask that dissertation. Come in the Discord and ask. I ain't even gonna read. I'm gonna turn my head this way and look like this. I ain't even gonna. I just saw something pop up over my head right here. I said, what is that on the screen? And it's a dissertation. So you gotta you got a volume balance there. So you would include that with your Bissy. And since this wick does not come down to consequent encroachment,
Tim,
then
can you hear me?
Yes, I hear you now.
Okay, cool. First of all, I said hi, and you didn't even acknowledge my presence in the chat, but that's okay.
Where you at?
My question,
Oh yeah, I see you
I
out there.
put the
What's up,
wizard
Kashaya?
emoji. Thank you. I'm good. My question, I just wanted to know if you can go over what you meant by the market will tip its hand, like give an example. But if you do that in this thing, then I don't have any questions. Okay.
For Kashaya, we're going to talk about the market tipping its hand. Right? We're going to talk about it. And
Okay, thank you.
And what does that mean? The market tipping its hand. Forget about the price. Move out of the way, price. We're going to talk about this. Okay? So, for everybody
Thank you, Tim. I'm going back to YouTube.
Okay. For everybody that's not a mentee, welcome to the homework review. You got to put up with me talking trash. Right? So, when it comes to the market tipping its hand, right? That's just fancy talk for allowing the market to form additional structure, right? Allow the market to form additional structure. And why do we wait for the market to form structure, right? Just think about it, right? Just think about it. Somebody tell me why they feel like somebody jump in the Discord and tell me, why do you feel like it's important to let market form structure? What do we need the structure for? Right? Somebody tell me, what we not just at all-time highs. At all-time highs is very important at all-time highs. More info. Right? More info. And what are we looking for inside this info? They done fired Michelle to have something to go off of. Expound on that, something to go off of. Get real specific there. What are we looking? Not just something to go off of. What are we looking for? Right? We talked about what's okay, range and PD arrays, but what are we looking for? We're talking about tipping the hand, right? We're talking about tipping the hand. What are we looking for, right? Signatures. Oh, look at there. We looking for algorithmic signatures. And the only way we're going to see these algorithmic signatures is if we allow the market to form structure, right? We got to let it form the structure, right? Because what do we say, right? We don't need indicators. We don't need trend lines. All we need is to see what the price is doing. And if we see what the price is doing, then we can start to look for algorithmic signatures, right? And if they jump in, and if Uncle Powell hit the button to stop the algorithm, he can only hold it. You know what I'm saying? He can only hold it in ranges. He can't stop the algorithm from being the algorithm. Because no matter if the algorithm is going up, it's going to do specific things to go up. If it's going down, it's going to do specific things to come down. If it's consolidating, it's going to do specific things to consolidate, right? And if they don't want it to go too far and they hit the button, say stop going up, it's just going to do algorithmic things up. It's going to do algorithmic things down. It's going to do algorithmic things sideways. They can't stop the algorithm from being the algorithm. So if we allow it to form structure, then we can say, oh, I see what the algorithm is trying to do. All right. So when you get to your destination, when you get to Picasso's house, right? Everybody remember that we were talking about, well, for however long we was back here somewhere, right? We talk about it all the time, but I remember this area because I remember we was talking about this looked like Texas. Remember we was talking about this little area right there when it was just down here by itself. We was like, that looked like Texas, right? We said Texas had formed right there, right? We were saying we were on the right side of a market maker buy model, right? And Picasso's house was up here. Why? Because we said that was the initial consolidation. Oh my goodness! Look at where we are now! God dog it! He keep proving that this mess work. We just can't stop him. He keep proving that this ICT mess works. What are we gonna do, Ichabod? So, right, once we get to our destination, once we get to Picasso's house, right, this is Picasso's house up here, right, above this high, this buy side up there. Price was being drawn up there. Now that we're at Picasso's house, right, and this case is very important because why? If we go up to the highest time frame that we have, which is a monthly chart, right? If we go up to a monthly chart and look at the candles on a monthly chart, right? There is nothing higher than where we are now. We are at all-time highs. What don't we have to look up and to the right for? What's not over there? Any type of what? Right? There's no what over here. Right? What's not over there? Somebody tell me. What's not over there? Price action. There's no price action over there. There's nothing over there. There's nothing to look at. Right? We have no structure over here to look at. So we have nothing to look for algorithmic signatures from, right? So, and we get into tipping its hand. So, one thing you can do when you're at all-time highs is use institutional market structure to utilize Fibonacci tools to project possible targets beyond the high, right? But Tim, what do you mean institutional market structure, right? So when you come, right, this is our high right there, right? That was our old high right there, okay? So we're looking at a 15-minute time frame. And whatever time frame you choose, price is fractal. So whatever time frame you choose, right? The easiest way for you to figure out, Tim, if we're, and you don't have to just be at all-time highs to do this, but this is important to do at all-time highs because you don't have any highs or PD arrays or anything to look at up there, okay? The easiest thing to do is to look at when did price turn around? Price turned around right here, right? How do you know price turned around? Because it did, right? So if we hadn't got to this high yet and we see that price turned around, right? Just come to the spot where it turned around, right? Just come to the low where it turned around, right? And then stretch your Fibonacci tool from that low back to the first high from that low. That will be there. Boom. Right there. That's where you anchor your Fibonacci tool to see how far can this move go. Because this is where it turned around. How far can that go? And then you just start to look at deviations, right? So as you're coming to the high, right? If you, and this is for any time, right? So for any time you're trying to project where price is going, we're getting to tip in the hand, right? Do this where price turned around, run your Fibonacci tool from the lowest low back to the first high, right? Or if you're looking at it the other way, just flip it from the highest high back to the first low. So you're going back. You're stretching it back, right? Okay, so if this is your high, you want to look at the deviation that's beyond that high as your target, right? So in this case, you got a 1.5 that's above there. Where did we hit that 1.5? Boop, pull it back a little bit. We got a 2 there, right? We got a 2.5. We hit that 2.5, boop, pull it back a little bit. Remember what happened at them 0.5s? We tend to, every now and then, we'll pull back. We pull back at the 1.5. We pull back at the 2.5, right? We got a 3.5 up there. Hit that 3.5. What do we do? Boop, pull it back a little bit. You know what I'm saying? So you see price is fractal, and you see that this is how you use the institutional market structure to anchor your fib to give you realistic projections. If it wasn't realistic, right, we wouldn't be seeing these algorithmic signatures of we hit the 0.5 and we pull back. We hit the 0.5 and we pull back. We hit the 0.5 and we pull back. Price tends to either consolidate or retrace a little bit when it hits that 0.5. Why? Because at the halfway point, at the 0.50, price tends to consolidate. In the middle of a dealing range, price tends to consolidate, right? It tends to consolidate. We already know that from a bunch of other historical type stuff. Price tends to consolidate, right? Okay, so that's how you can give yourself realistic targets above the high when we're at all-time highs, right? This is how if you want to participate in this premium, right? If you want to participate in buying in the premium, because when the price is bullish and you reach all-time highs, you don't try to pick a top. You just continue to trade with the last bias that we had, right? And use the extensions to give you realistic projections, right? And then it doesn't matter. I'm just doing it from here because this is before we got there, and that gives us the projection of how far can this move go above the high, right? If you come in and say, well, Tim, what if it's already up there and I don't want to go all the way back there? Okay, just go to, right? Go over there, get above any way you want to go, right? Price, right? Price turned around there, right? Use that one right there. Price turned around there. Use that one right there. Price turned around here. Use that one right there. You know what I'm saying? And then we say your institutional market structure, what am I looking at, right? I'm looking at where you have swing lows that create a swing low. They make that little smiley face. I see you looking at me, right? There's a swing low. There's a swing low. There's a swing low. Whoop. Swing low's making a swing low. That's the one you want to do your field projections off of, right? Swing low, swing low, swing low, right? And in the sense of fancy ICT terms, right? Short-term low, intermediate term low, short-term low. Right? Because a low with a swing low with a swing low to the left and a swing low to the right, that's an intermediate term low. Right? An intermediate term low with two intermediate term lows on either side of it, that's a long-term low. Right? In case anybody was wondering what that was. I don't like wasting all that time thinking about all those fancy words, so I just look for the smiley face. That's my institutional market structure there. Go from that low to that high right there. And now you see, right, this is one standard deviation away right there, right? We went up one standard deviation. That's a realistic goal for if you was getting into a move here, right? Price broke out there, consolidated, dropped down into this area. If you was looking to get long in this area over here, One standard deviation, that's a realistic goal for this. How far can this move go? Boop, there go a target for you right there, right? Yes, 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 y'all. Now, tipping his hand. Now that we see price is still going, right? We're above this high, right? We're going. Now, you say, Tim, this is way up in a premium for me. I do not want to participate in buying this at all. I blame you not. It is treetop tall. I blame you not for not wanting to participate. So, if you don't want to participate in buying here, now you let the market form structure, right? You let it form structure, okay? Now, depend whatever time frame you're looking at.
Tim,
Depend whatever time frame. I hear myself talking.
Before you,
I hear myself talking.
hold on. Before you go past the fibs, I put a question, but just really quickly, do you? I ran it on a daily, and of course that gives a much higher projection for, especially in this moment when you're at all-time highs. You recommend running that fib on that lower time frame for more realistic projection?
No. Any time frame you want to run it on. You just got to know what time frame you're running on and what time frame you're using it for. Right? If I'm mute YouTube while I'm talking. Like mute your TV while I'm talking, cause it drives me crazy.
Sorry.
All right. Okay, so you need to know, okay, like I'm doing this on a 15-minute time frame. So I know this is only for like intraday trading. Right? This is only for intraday trading. This is not for looking for like long term what I'm gonna be doing with like swinging options or anything like that. This is just for intraday, right? And if I go to a daily time, excuse me, if I go to a daily time frame, right? Now if I go to a daily time frame, then now I'm looking at this for a longer time frame. And on the daily time frame here, right? This is my little smiley face there, right? So I will be looking at the institution. God dog it, Tim. Just give me a new field. I'll be looking from this low here to that high there, right? And then when I look at the high that we was looking at there, right? So one deviation above that, that's that area there. And now from this, like, so when price came up here and we traded back down, if I was buying calls here, right? If I was looking to get long inside this fair value gap, get long at that breaker, anywhere over here. If I was looking to get long in this area, now one standard deviation, right? This right here could be my first target right there, right? That's my first target right there for when I want to get out of my trade. Or, you know what I'm saying, that could be like a target, because you see, it's the first deviation above that high right there, right? Because the half deviation is below that high, but that one is above that high. And then just like everything else, you can break it down into quarters. If you say, okay, that's a little bit far, I don't know if we're going to go that far. If you get a little skittish about it, then you can go in and put in your 0.25s and look at what the 0.25 would be to that. All right. All right. You could put in the point. Is it point? No, 0.75. I think it's 0.75. Like the in between. Oh, I got to put negative. I'm tripping. Negative. I mean, there you go, right there. Right, the quarters, in between the quarters, right? You can, that could be a scaling target there. You can say, okay, I'm gonna take a little bit off at the lower quarter, right? Then I'm gonna take the rest of it off there. You know what I'm saying? You could just pick, but you're looking at like a higher time frame. This is like a daily thing, and when you look at that now, you can see that from, like it just said, if you got in on this day right here when it came back down into this area. So now, and then it took up until today, right? So that's 12 trading days for that to play out, right? That was 12 trading days for that to play out over that time right there. So you just got to know what time frame am I looking at it on, you know what I'm saying, and how do I want it to play out. So this is coming from there, right? And then if you say, okay, I don't want to see it from this leg, right? I want to see it from the leg that I got in on. So then you would go to the leg, the lowest low of the leg that you got in on, right? That would be your low. And then you would go back to the next high right there. You can either use that high or that high, since they, so that's the parent of the drop right here. That's the parent of the drop. So we'll just use that. And then you can say, okay, there's one standard deviation right there, right up there. There's a half a standard deviation right there. You can look at it from there. You see what I'm saying? Right? You can use it to project there if you think, okay, the bullishness is strong enough to get me up there. These are my targets off of the daily time frame. And then you just would have to manage as such. But for this move hit, like if you got in here, right, I would be using this area over there, right? If I'm anchoring from here, right there, it would be from a move that dropped to this area to go up. Like if it came down and I got long here or here in one of these fair value gaps, then I would use this right here to anchor it to see how far up this can go. And then it'll be, you know what I'm saying, these will be my targets. And then you can confirm it with using, let me show you what I'm talking about, like what I mean by confirming it, right? When you come from, right, the bottom of the structure here, right? So you get the structure there, okay, from how far can the overall go, and then you come to the leg where you got in it, right? You come to your leg, right? That's the low, right? That's the swing high from that right there. And then you look, and when you see your deviations real close like that right there, that's what I like to see when they fall very, like either exact or very close to each other like that be giving me some good confirmation, like, okay, yeah, that's how you confirm it, right? So you would look at, this is the smiley face and this is the leg that I entered in on, right? So in this case, if you was measured from here, this would be the smiley face over here, right? Not really a smiley face in this case, but this will be the lowest point. And then when it pulled back, you will be confirming it like that. Like you'll be coming over here at something like this, right? Coming to that high to that low right there, right? You will be confirming it like that. You see what I'm saying? And then you'll be looking at, okay, we got, when you got, you know what I'm saying, areas that's lining up real close to each other like that right there, those be like good signs that, okay, yeah, I got a nice target I can look at, because this swing and this swing, they got areas that's lining up real close together. So, you know, I got a good chance of that panning out. You know what I'm saying? Like that. But it just depends on what time frame you're, well, I mean, it depends on what you're looking to trade with it. Like if you're looking to swing trade, you would look at higher time frames and understand it's going to take longer to play out. And if you're doing intraday, then you look at the lower time frames and understand that the higher time frame leads the narrative. Make sense? I didn't read your question, but did that make sense? Okay. All right. Gotcha. Okay. Now, tip in his hand, right? You say, I don't want to participate in this, Tim. It's treetop tall. Okay. It's treetop tall. So then in that case, you want to go up and then you want to look at, okay, where are we overall, right? First of all, right, we're up here. This is where we are now. And if we look at this area here, right, we can see that, right, this, from this low all the way up to that high is the current dealing range that we're in, right? That's the current dealing range we're in. Can anybody explain to me why I said this is the current dealing range that we're in right now? right? Why am I saying this is the current dealing range that we in? From this high down to that low. Anybody want to take a shot at it? Somebody gang jump in the Discord and take a shot at. There you go, Sean Sinister. Sinister showing off. Took out a low and a high. Very good, right? For those who don't know what I'm talking about, price dropped down here, took out sell side, right? Then it came up on its way up. It took out buy side, took out buy side, taking out buy side. When price pulled back here, it didn't come take out no liquidity. So this right here is just a price leg inside this overall dealing range right there. Okay, so this is our current dealing range that we're in on the daily time frame. Okay, that's our current dealing range that we're dealing with on the daily time frame. And when we look at our dealing range, let's get all this other junk off the screen. Right, we get everything off the screen. When we look at our dealing range, right, we know that right now this is the highest high. Where's my cheese and rice? Give me something. Right, this is our highest high. Sorry, y'all. I'm tweaking. I couldn't find my templates. I'm looking at it and it just wasn't giving me what I wanted. Right. And this is our low. Right. Okay. Right. So that right there is our dealing range there. Now, as we can see, our equilibrium of this dealing range is right here. Right, that's equilibrium of the dealing range. Okay. Now we can move the Fibonacci tool. Oh, God dog it. Now we can move the Fibonacci tool. Right, so now we see our dealing range here, right? Price, what did we look here and we say, okay, is this dealing range? We look to the left, right? Is this dealing range inside a larger dealing range, or is it busting out the top or the bottom of a dealing range, right? So which one are we doing? Is this inside of a larger dealing range, or is this busting out the top or the bottom of a previous dealing range? What is it doing? Out the top, right? So we're busting out the top of a old dealing range right there, right? How do we know that? One, because we took out all-time highs, right? So we're busting out the top of a old dealing range. So now we know that we are inside a new dealing range. This is a total new dealing range that we're inside of because we're busting out the top of this dealing range. And when you're busting out the top of the box, right, you're forming structure to bust out the top of the box. What is that telling you about price? It's telling you that price is bullish, right? So price is bullish right now. Now, since price is bullish, now you want to have a place where price is giving you a bearish breaking structure. Meaning when if price takes this out, and what kind of liquidity do you engage to let you know that a possible reversal may be afoot? What type of liquidity do you engage, right? What type of liquidity do you engage? If nobody get it, I'll give you I'll make it
What do they say?
external.
The opposing liquidity.
External. We got it. We
Oh,
got it. External
okay,
liquidity, right?
okay.
So looking at our dealing range, right? Looking at our dealing range, this is the highest high. This is the lowest low, right? Tim, we got a low right here. What type of liquidity is that low inside our dealing range that we're looking at? What type of liquidity is this right here? In accordance to
What
our
you just
dealing
said,
range.
right? Internal.
Yes, internal liquidity, right? That's internal liquidity right there. So if we take that low out, that does not mean that the market wants to go down, right? That does not mean the market wants to go down if we take that low out, right? Meaning if we come down and get us a closure, right, on whatever time frame you're looking at, right? If we come down and get us a closure below this right here, that doesn't mean the market wants to go down because we're taking out internal liquidity, right? That just means we got a deep retracement, right? But if we come down and take out external liquidity, right, then the market may be telling you that it wants to reverse. Now the market is saying, I don't want to be bullish no more. I want to be bearish. Okay? So on this time frame we're watching here, this is the place that changes you from being bullish to bearish on your higher time frame, right? This is your point down there, all the way down there. Price can do what it want to do, but until we start coming down here, this is where you say, okay, we might want to go lower, right? And then that's when you would look higher than the time frame you're on now to see, is there anything down here on a higher time frame that price can possibly be drawing towards, okay? First of all, that's what you want to do. You want to find out where are you in price, all right? Now that you've identified where you are, now you want to identify are there any discount PDUs for the entire dealing range, right? Right. So for this entire dealing range, the only discount PDUs that we have is internal liquidity there, right? And then we have a BISI way down here, right? We got a BISI all the way down there. Those are the only discount PDUs, right, that we have for our entire dealing range. Okay, so now you say, oh man, price would need to come all the way down here to get to a discount imbalance, right? And then to get to this internal sell side there, price has to come down through this balance price range, right? And it will have to fight down inside this balance price range just to get down here, right? So you start to weigh your options. What is the likelihood of price coming all the way down to a discount in my entire dealing range right now, right? So since you got a balanced price range here that price left and didn't want to go back down through, right? And then we got a balanced price range here that price has left, right? Now you're looking, say, okay, we got us a breaker here. Okay, we got a breaker here. Okay, there's a breaker. And then we have a fair value gap here that's in line with that breaker. Let's see if we take that there. That right there hits, let's see if it hits consequent encroachment. If it hits consequent encroachment, yep. Okay. It doesn't quite hit it doesn't quite hit consequent encroachment right there. But since it's so close, I'm just going to go here. right? Boom. And I'll just look at that as a new day opening gap instead of incorporating it with that, right? So now, looking at that breaker and looking at that fair value gap, and it's just above this balanced price range, right? So now you can refine your scope, right? You can refine your scope to the most current area of price action, right? Which is here. This is the most current area of price action right there inside our entire dealing range, right? This is the most current area of price action right there. So instead of looking at the entire dealing range, in this case, since we got this balanced price range there, we got a balanced price range there, and price is showing an unwillingness to want to continue down. Now we can look at our from this low to that high, because this is the area where price, right? This is the area where price took off, right? You can even refine it more and go to that low right there. But since this low is the low with the internal liquidity, I'm using that right there, right? This is the last price leg right there, right? We got that low up to that high. That's the last price leg right there. So I'm using that last price leg. And when we look now, we see that we have, right? We have a discount BISI along with a breaker, right? If price was to come back and hit this, then this could be a possible area to want to participate and go, because it's pulling back to a discount, right? We have an order block there, right? If price came back down and then, you know what I'm saying, it comes back down into this, if it hits the order block, if it hits that, right, then this could be a possible area to participate and going long. Because why? We're looking for reasons to continue with the bias until we're proven wrong, right? Until we're proven wrong. That could be a possible area to look to participate, right? If price got super heavy, right, this could be an area to look to participate, right? So you're looking for places to participate with the overall bias, but you don't want to just buy up here because it's treetop tall, right? So now you're looking for areas to participate. Now you say, okay, if these are the areas I'm looking to participate, right? What's in between my anticipatory reactionary point and where price is now, right? And you look and say, hey, we got a BISI here, right? We got a BISI there, right? In line with a mitigation block right here, right? So we got a BISI in line with the mitigation block right there. Okay, that's standing in the way of what I want, right? So when I look at price in the sense of where we left the balanced price range, right? When I look at price in the sense of when we left this candle here is when we left this balanced price range right there, right? When I look in the sense of that, now we have a mitigation block that's in the discount of this move, right? And then this BISI is in the discount of this move, and that mitigation block and that BISI's job is to stop price. So if price got here, right, and then we started to come back up, right, then we could look like if price came here without leaving no type of imbalance, right, and it showed signs of wanting to respect this, then we could see, does price really want to hold here and go back up, or do we really want to make it there? So this is when you're allowing price to form the structure. You're not just jumping in as soon as it touched that, right? You're looking to see, are we forming structure, right? Do we come here, create a low, and then do we come back and sweep that low and then start to go up, right? So we could look at that. Are we forming structure here? Do we come down to that, come up? Do we sweep that low and now we're starting to go back up, right? Or do we form the structure of coming down to this, right? And then pushing down, and then start to go back up. You're letting price form the structure to let you know where should I participate in the bullishness. Because until we come down here, we're still looking for reasons on the overall time frame to be bullish, right? We're looking for reasons to be bullish. And if we find that as price is forming this structure, we find ourselves on the right side of a sell model, right? And we don't want to participate in going against the grain, like meaning trying to buy puts, right? We say, okay, we're just gonna wait for it to form the structure so I can buy calls, right? If you don't want to trade against the grain, right? If you don't want to buy puts because you say, okay, we at all-time highs, we might consolidate, we might doodle around, we may pull back a little bit. I don't want to buy puts, and you find yourself on the right side of a market maker sell model, right? You'll just wait until price comes back down, right? And if it wants to just say complete a market maker sell model below this low, you'll wait for it to come down and complete it below that low, and then look for your signs that you're on the right side of a market maker buy model, and then look to buy your calls. But that's how you let the market show you what it wants to do or tip its hand. Did I confuse anybody?
Nah, good explanation. Hey, but I got one quick question before somebody get a question in. A BITS is the same thing as a bearish fair value. I mean, a bullish fair value gap, right?
Yes.
Okay. All right. I know you done told me that 100 times before, but
That's
sometimes
that
I gotta.
elephant memory.
Yeah. But yeah, that
And
I got it
what's a
good.
bearish fair value gap?
What do you mean?
What is it?
It's a
You said
basic.
I said a bearish fair value gap.
Oh, a bearish fair gap is a city.
Okay. All right.
All right.
All right. What else y'all got, man? What else y'all got? Cause everybody was saying they ain't have no questions, and Kashai said that was the only question she had. So I said we just gonna do the Q&A right here while we here. So what else y'all got? Shout out Miss V in the Discord. Shout out Lump in the Discord. What's going on, 80? That's it. Ain't nobody got that. I can go back to watching the madness. I can go back to watching the madness. Okay, dope, man. Hey, before I get out of here and hit y'all with the promo one more time. Nah, I said we just gonna do this right here. I said get out of the way, price. We ain't gonna look at the price since we was going over that. Price went up. That's what it did. We looked at when we went in, price went up all night. I only day trade futures now. I used to swing trade options. I used to be exclusive. I used to be an options trader. I used to swing trade options. I started out doing like companies, and then I started only doing the S&P, doing like the SPY on swings and the SPX on day trades, and then in 2021. I think it was either 2021, no, 2022. 2022, I went exclusively on futures because I just hate options. I hate the Greeks. I hate the Greeks. There's no Greeks in futures, right? The price is the price. So it is that. All right. And then, like we said, looking at price. This was where we opened up. Price just went up. Nice trend day to the upside. All right, it's just a trend day to the upside. The morning session was kind of garbage. Because if you look at the morning session from 9:30 until 12, right? Right. Price was, it didn't really offer anything as far as trading. This is a 15-minute chart. It didn't offer anything as far as trading, right? And then if you look at from lunch over, this is the lunch time right there, garbage, right? And then if you look at from 1:30 over to 4, right? Again, looking at this 15-minute chart, right? During the morning time, didn't really offer anything as far as a trading opportunity. Like looking at this, it just, the price action wasn't offering a good trading opportunity looking at this 15-minute time frame, right? Lunchtime is just consolidating, right? And then the afternoon, it didn't offer any opportunities. But in the midst of all of this not offering any opportunities, what do you see? All right? What do you see in the midst of all of this? We come over here. We got the wig snatcher right there. Consolidated, went in the right direction, immediately reversed, and then reversed. Right? We got the wig snatcher. Right? Traded back down into the range. Consolidated a little bit. Right? After consolidating, took out liquidity. What's that? Consolidation, expansion, reversal. Right? And then right there is retracing. You see what I'm saying? It's like you see these algorithmic moves, but it's just not offering anything in these pockets of time that's crystal clear to get an entry, right? And this is what frustrates many traders, right? This is what frustrates many traders because they say, okay, if this don't work, it's doing it. You're looking at it doing it. It's just not offering an opportunity here. It's not offering an opportunity there. It's not offering an opportunity there, right? For this particular time frame. Okay, let's go down to a 5-minute. See if the 5-minute gave us anything, right? Same thing. These are the pockets of time. This is the New York morning, right? We're coming into the New York morning, right? We sweep out liquidity there, right? We push up. We have the 5-minute, boom, gave us a 5-minute fair value gap right there. 5-minute gave an opportunity to trade right in here at this 10-15 candle, right? Came down, took out the sell side, pushed up, breaking market structure, trade back down into the 5-minute fair value gap. The 5-minute gave a trading opportunity right here inside the New York morning window, right? When is this time right here? This time that's the 10:05 candle. That right there would be your New York silver bullet trade right there. That's your silver bullet right there. Swept liquidity, breaking market structure, retrace back to the 5-minute fair value gap. That is your New York silver bullet right there after 10 o'clock, right? From between 10 and 11 o'clock. There's your silver bullet right there. So 5-minute time frame gave you a silver bullet. Lunchtime, Platuki, right? And then the New York afternoon, right? You came down, swept liquidity, came up, breaking market structure, trade back down into a 5-minute fair value gap at 2 o'clock, right there. It's not the silver bullet because it's, well, yeah, it's the 2 o'clock candle, right? So there's your PM because the 2 is between 2 o'clock and does it have to form after 2 o'clock? I don't know if it got to form after 2 o'clock. It's not the silver bullet. If it's just trading into it, it can be. But right, the afternoon 5-minute gave you the same thing. Swept liquidity, breaking market structure, trade back to the 5-minute fair value gap. Boom. So the 5-minute time frame. Boop boop. If you watch the 5-minute, today was a beautiful day for you. If you watch the 15-minute as your entry, you're pissed unless you're a turtle soup trader. There's a turtle soup right there, right? You got a turtle soup here. You got a turtle soup there. If you're not a turtle soup trader, you was pissed looking at the 15-minute. 5-minute gave you an opportunity in the morning, opportunity in the afternoon. 1 minute, 1 minuto, right? The 1-minute time frame during the morning here. Chop City, right? 1-minute time frame is ugly, right? Ugly, very high resistance. Not give you, looking at the 1-minute time frame, I would not have trust this right here with my entire life. right? Now, mind you, it did give you opportunity, and I ain't gonna hold you. I did take me a scalp at 10:05 right here. This 10:05, what's the name right here? I did take me a scalp right there, right, and took it back to, I think it was that high, right? That high right there, because it was like around 20 points, but it was just a quick scalp because this right here, I was like, I do not trust this at all. We've been doing deep retracements. I'm just going to take me a quick scalp, right? So once we went up here, pulled back, it was right up in there because it was the 10:05 Bissy right there. I was like, I don't trust this right here, but since this low has been protected, I'm going to try it, right? I'm going to try it. We're inside the macro, right? We should engage the buy side. I'm going to trust the process, but this has me nervous. We hit it. That's it. I scalped out, and then look what price did. Came all the way back down and dropped below that low again. Very high resistance, right? So if you were in and out, that was an opportunity. I did take it, right? And then the rest of the morning, garbage. Nothing for the rest of the morning, right? As far as trying to take a decent trade. Afternoon, lunchtime, garbage. The afternoon, this was, you would have to be very aggressive to take this. It is an opportunity though, right? Because we came down, right? Got a break in market structure, traded back into a balanced price range, right? That's an opportunity if you were aggressive like that, dropping below. Let's see if that traded into anything of note on a higher time frame. Let's go up real quick. All right, so looking at the higher time frame, that came down into a breaker. So yes, it did come into a higher time frame anticipatory reactionary point, right? Traded down into a breaker. Okay, so that is, something worth looking at. So now you're looking, okay, we traded down into a breaker, right? Got a break in market structure, trade back in. So yeah, this would be more aggressive, but yes, that's an entry for the afternoon time frame there. Take it back to the highs, right? And then we got a retracement back here, sweeping the sell side, and then nothing else in my opinion, right? In my humble opinion, right? Nothing looking like worth taking, because I was watching it around this time and I didn't see anything over here that I wanted to take. That's why I have this fair value gap there. I got that SIBI there because I was watching price this afternoon, but I didn't see anything that I wanted to push a button on, right? So that's that. Is there a higher time frame PD array that, or was array that? Is there a higher time frame PD array that, or was it just that sweep of liquidity that was used to lift off at 21? Okay, all right, because my reading wasn't reading, or your typing wasn't typing. It was hurting my head. On the ES, or I think that's NQ, was the same as the 15-minute CE equilibrium. On the ES or EQ was the same as the 15-minute CE. Didn't trust it because of 1 minute chop, but it was a good entry. Oh, it was the same on the ES. That's what you're saying. Price was the same on the ES, but you ain't trust it because of the 1 minute chop. Okay, got it. Okay, but the 1 minute chop had, that's how it was too. It was very choppy. Watching the 1 minute, it was very choppy. So that's why you always want to stay stay mindful of the higher time frame. That's why, like a lot of times when I'm watching price, I won't drop down to the 1 minute until it gets to my anticipatory reactionary point. Because it's like, okay, like looking at price on the 15 minute, right? During this New York morning session right here, right? Price just looks like it just went up. It don't look mad choppy, right? It just looked like it went up, right? And but we go down for detail, and as we drop down to a 5 minute time frame, right? Drop down to a 5 minute time frame, right? We can see here that right here we got us, right? You can see that here we came down, taking out the sell side, right? Left the sell side and then went up and took out the buy side, right? So now you can see, oh, we just got a break in market structure on the 5 minute, and we left a 5 minute fair value gap there, right? So then what do we always talk about? We say we look over here inside this leg to see if price, you know what I'm saying, created any inversion fair value gaps, right? So we look over here, we got one inversion fair value gap there, right? We look down, we don't have any more inversion fair value gaps over here, right? And then we got an order block there, which is a propulsion block, because that order block is inside this huge order block there. All right, then price comes back down into the fair value gap, the order block, all of that. But watching it on the 5 minute right now, looking at it on the 5 minute, now we can say, okay, on the 5 minute, I got this fair value gap along with that order block, right, along with this mitigation block that I can be looking to do something off of, right? And now when price trades down into that anticipatory reactionary point, I put a line there because anything to the right of that line is when we touch that. And then when you look at the 1 minute, now when you start watching the 1 minute at this point right here, because this is when it touches it, right? Because we're coming, remember, this right here, letter anything to the right of this is when we traded into it. So right here is 10-15 candle. When we trade down into our anticipatory reactionary point right there, right? This is when you're looking at, okay, what is price doing there, right? So you see here, we come down, we take out, right? We come down, we take out sell side, right? So we drop here, take out sell side, right? Trade down into the order block, trade down into the fair value gap right there, right? We're trading down into a 1 minute fair value gap right there. So at this time, right? At this time, if you're watching price on the 1 minute, right, you can see that we got a dealing range here, and you can either choose, say, okay, we've come back down to the fair value gap in the discount of the dealing range, right, at the last down close candle of this order block there, and you can say, okay, I want to buy that. But if you don't trust that, then you can wait for a price to come back up here, right? Because now you see it's already come down. We come back up, we create a breakaway gap there. Get out of the way line. Get out of the way line. We create a breakaway gap there, right? And then we create another fair value gap there, and then price starts to consolidate here. Okay, when it starts to consolidate there, then we push up, right? We got a volume imbalance, and there's nothing, to be honest, there's nothing clean. You know what I'm saying? There's nothing clean to trade off of. So in this case, right, coming back, like the only chance I would have had of taking a trade here was either trading directly off the 5 minute PD array or trading off of this imbalance inside this price leg, right? That's the only thing that I would have been trading. Why is that? Because once we started here, you can see that we're sweeping liquidity, right? We're coming into an imbalance, sweeping liquidity, right? And then trading into the imbalance of this dealing range here. right? But if you don't trust that, there's nothing over here to trade, in my humble opinion, right? Unless you trade like off of order blocks, right? You trade into the bullish order block there, but as far as fair value gaps, nothing, right? If you trade off the order block, buy it on the order block inside this consolidation, nothing over there that I would trust. Now the Motorola flip. That's all I got, man. It's 7:09. We've been on here for an hour. It's an hour and 10 minutes. Been on here for an hour and 10 minutes. I appreciate y'all for hanging out with me. Mentees, this was our Wednesday night Q&A. Since ain't nobody ever got no questions, I ain't got no questions. Hopefully the questions that were answered helped somebody. Again, we got 14 slots left in the boot camp. Gang, y'all got 75% off code in the Discord. Non-gang members got a 50% off code, SPYDER50. All right, there's a link pinned at the top of the chat. If you want to participate in there, is a link, the first link in the description of this video. If you want to participate, I appreciate it. Yeah, y'all hit the like button. If y'all feel like somebody might get something out of this, share it with them. Speaking of, if y'all think somebody get something out of this gang, if you got a friend or family member that you think could get something out of the boot camp, you can use your 75 off discount code for your friend or family member to get into the boot camp. Just let me know who that person is, so I won't be like, hey, how did you get this code, and then shut everything down, right? So the new people, since you gave them early, yeah, but we ain't started no what's names yet, so we ain't started no classes yet, so they'll be all right. Oh no, they don't have access to the Wednesday nights. They only got access to the Q&As. They only got access to the Sunday Q&A. They don't have access to the homework reviews yet, cause they ain't got no homework to review yet. Stop worrying about what I'm doing. Fake admin. Fake admin. It's gonna be in the morning. It's gonna be in the morning. They will be everything gonna be recorded though. So if you can't be there in the morning, you can go back and rewatch it. And then when we do like the homework reviews, it'll be, you know what I'm saying, you can ask your question then. But everything gonna be in the morning. And then once we get started, if the overall consensus of like the educational part of it is like, hey Tim, can't nobody make it in the morning, then we'll adjust to like what's the best time for the group as a whole. I know we ain't gonna please everybody, but what's the best time for the group as a whole, to then that'll be the time that we can do like the educational part. But the tape reading gonna be the morning, you know what I'm saying? And but I'm flexible on the educational part, but it's gonna be a slideshow presentation just like I always do, but it's gonna be live. You ain't gonna be watching a pre-recorded video. It's gonna be me walking through the slideshow live. So if you got a question right then, we can get into it like once we get to the end of the presentation. Yes, longest Timothy here. What there, you here? What there? Junior. Timotheus. This nigga went to the gym. He at the gym. I was just about to call you.
What's up?
What? I gotta go get my son. He getting his hair done. Uh, um, so yeah, I'm I'm flexible with the educational time of it. So like, if the learning part for everybody is better in the evenings, we can do it in the evening. If it's better for everybody in the mornings, is the learning part. I'm gonna let that be up to the gang. But the tape reading is in the morning, and the 101 at the end of the boot camp. The 101 is just gonna be on your schedule, right? Everybody that's in it gonna get an opportunity to schedule a 101, right? And it's gonna be according to your schedule, and we'll start scheduling that once we get into phase 4. Like toward the end of the boot camp, we'll start scheduling the 101s. It'll be up to your schedule how that goes. It's an hour long 101, and hopefully it won't be a whole lot to talk about, because in phase 3, phase 1 gonna be the teaching part. Phase 2 we gonna start the tape reading. Then phase 3, we're gonna be working. I'm gonna work with anybody, like any individuals that's in there that need help with like identifying or coming up with a model that fits their trader identity. Then we're gonna be working hand in hand with each person who needs, you know what I'm saying, that help. We're gonna be doing it as a group, because each one teach one. It like this person struggles might help that person, and then that's gonna be in phase 3, and then phase 4 we gonna be doing deeper dive into questions and still tape reading and start to schedule the 101s. And then by the time we get to the 101, hopefully it won't be no whole lot of questions out there, because we'll be, all ready to go. But again, I got to go with my son. First link in the description if you interested in that. I ain't gonna worry about running the promo again, because I got to leave. Gang. If you don't want to participate but want to hook somebody up, your friend or your family, you can use that 75% off code to get them in. Non-gang. If you're not in the gang already, 50% off, right? 50% off. And here's the gag, right? Here's the gag. If you want to participate, right? So the boot camp $1,000, right? 50% off that is $500, right? If you want to participate, what I would do, right? I would sign up for the gang. Go in there. Black spot is what? $7.99 a month. I sign up for the gang, right? Get in the gang. Then use the 75% off code and get it for $250. And then save $250. That's what I'd do if it was me. But the 50% off code is cheap until the 14th. The 75% off code is to the 25th of December. If the 20 slots be gone before any of those days, too bad, too sad. It's only 20 slots. Will I ever do another one in the future? I don't know. Right now, I don't plan on doing it. I can never say never, but I don't know. Y'all enjoy the rest of y'all evening, man. Got to go get my son. I'll see y'all. What's tomorrow? Thursday? See y'all tomorrow at 6 for the price action recap. Y'all be safe out here in these trading streets, man. Gone.